when price takes a low. When price takes a low, that means when price takes this low right this here, I like to see inversion fair value gap. I like to see a bearish fair value gap here inside this leg that took this low. And you know that once price closes above that inversion fair value gap, no, fair value gap first before it will now become an inversion after the price closure. I will expect price to tap into it before targeting the extreme part, the extreme liquidity. So if you have a break of structure here, that means in form of a liquidity hunt, trap, or was that ICT call it turtle soup. Other school of thoughts call it liquidity sweep. But I want you to understand that once price takes a low, this low is preferably a higher time frame low. It's not any low that you see that you mark out. You make sure that it's like in the higher time frame, because this has to contribute to the probability of your trade. So marking out your lows in lower time frames, not higher time frames, it will actually reduce the probability of your trade playing out. So inside this leg that took this low, we are going to be looking for our inversion fair value gap here. Okay, so this is the leg that usually have the inversion fair value gap. It's a fab or gap. So this is a model, classic buy model, and this is the relative equal high right here. Buy side liquidity, relative equal high, uh, or anyhow that you choose to call it, depending on your school of thought. This is what it looks like: a high that is open, literally waiting for price to come and take it out. So this is what our model is. And if you bring this model right here, you will see that they are the same thing. You see that they are the same thing actually, because once price swept this low is this low. Once price took it out with this leg, so from this high to this low is this high to this low. When it took out this low, an inversion fair value gap was formed. If you actually zoom in, we are going to see that price, when it took out this low and gave us this nice fair value gap from, let me remark this, gave us this fair value gap from this high to this low was a fair value gap. So this fair value gap was actually invalidated and turned to an inversion fair value gap once price closed above this one, the low of the inversion fair value gap. So this is what we are marking out. We are marking out the low of this candle. Being that we have marked out this point in price, I needed to make it clear. So I will just use my rectangle to place it on this one to this side, and we have a nice little dotted line in the middle of the fair value gap, which is the sweet spot. I prefer to call it the sweet spot because that is where the real price action happens. But nobody tells you the midpoint of an inversion fair value gap is where the whole magic happens. It's where the whole magic of price action happens, and you have to be familiar with it. Okay. If you continue to look for it every day, you get conversant with it, and who knows, it may turn out to be the model that puts food on your table if you learn how to do this. Guys, do you know the most profitable time to trade an inversion fair value gap is actually the New York morning session. It is the sweetest time of the day to trade inversion fair value gaps. Believe me, it is a sweet time to enjoy this strategy, and it works like magic. Okay, so this gave us a premise to start framing buy positions once this candle closed above here. All right, now this low was the first uh premise. Okay, now the second confluence is the close of a candle which is actually bullish above this fair value gap. So that's like the second premise. Now the third premise is that we are convinced that price actually created this high before taking this low, and within this price range or dealing range, all right, there is still chance for price to continue gravitating to the upside, because even though this high was taken here, it was taken here, and this high used a kind of a swift liquidity sweep to take out the low of the range too, and created an inversion fair value gap, a fair value gap in the process, before turning it into an inversion fair value gap.